Welcome back, investors, to Ticker Time News. I'm Adam, and Thor Industries, ticker symbol THO, is throwing down the hammer today after the RV giant reported strong Q2 earnings results. The quarter included Thor's largest EPS beat in the past 5 years and strong revenue upside. This good news was definitely needed, as the company's share price has been in a steady decline since May of 21, when it was trading in the high $140. Now down to $85 at yesterday's close. That EPS beat is the standout item, though. It was Thor's third consecutive $1 plus EPS beat, so good upside was not entirely a surprise, but it was also Thor's biggest beat by a notable margin. Oh, and real quick, beat this crazy market with us by clicking the first link in the description. Okay, the company seems to have navigated its supply chain issues really well this quarter. Also, Thor notes that consumer interest is at all-time highs, as evidenced by the record attendance in sales achieved at the recent Florida RV Super Show, the largest RV show in the entire US. I think the upside can partly be attributed to higher margins resulting from Thor's decision to not chase market share at just any cost, and that was a good move. Gross margin jumped to 17.4% from 15.2% just a year ago, fueled by higher sales, operating efficiencies, and a reduction in sales discounts. The 220 basis point increase may not sound outstanding, but RVs are a very thin margin business, so any uptick has an oversized impact on EPS. Strong demand and supply chain issues caused backlogs to swell to $17.73 billion, an increase of over 60% year over year. Thor is making progress reducing backlog, though, which declined quarter over quarter from $18.07 billion at the end of Q1. Also, for its towable segment, dealer inventories have grown closer to optimal levels as Thor heads into its prime retail spring and summer season, and that's also true for the boating industry. However, Thor is being careful not to overproduce, and the industry definitely seems to have learned its lesson from the last upturn in 2018 when it overproduced, causing an oversupply to form as the market started to cool off. Looking ahead, Thor did not provide guidance, but it did sound bullish on its prospects throughout the remainder of fiscal year 22 and into fiscal year 23. The RV industry forecast projects total North American wholesale RV shipments coming in as the second best year on record. This is in line with Thor's upbeat view as well as what lies ahead for fiscal year 22 and 23. Bottom line, this was a great quarter for Thor, featuring a really nice upside and a bullish demand outlook. But there are a few things to be cautious about in the RV space right now, because it's facing three very significant headwinds. Number one is rising gas prices. RVs consume a lot of gas. Number two is rising interest rates, as most consumers need some sort of financing for their RV purchase. And number three is supply chains, even though Thor Industries has done a pretty good job at that so far. Oh, and I absolutely commend Thor for starting to get into the electric RV side of things. They recently introduced two new electric RVs, one towable and one motorized. Although this is a very small part of its business at this point, this could be the future of the business moving forward, though. So it's good that they're getting into it. Overall, this report bodes really well for Winnebago, ticker symbol WGO, and their upcoming earnings report on March the 23rd. But remember to take a cautious approach on the RV space right now because of those three headwinds that I mentioned earlier. What do you think about Thor's earnings report and its outlook for the RV industry? Let me know in the comments below, as your comments really do make these videos so much better. Smash that like button, share this video, and click the first link in the description to beat the market with us. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.